Markets rose after the news, as we showed you. The Dow was considerably higher. And you remember I told you how I'd explain why? Well, there you are. I mean, that chart tells the day of when they heard that the tariffs or the 30-day reprieve would be announced. Still, today's gains are barely making, well, they're not, they're failing to make up for the losses in recent weeks. All US major averages remain below where they were when President Trump was inaugurated. Ruchir Sharma is the chairman of the Rockefeller International and founder of Breakout Capital. His latest book is What Went Wrong with Capitalism. It's an excellent piece, and he's with me now. It's not so much what went wrong with capitalism, it's how can anybody operate capitalism when you have a president that makes a decision, changes it the next day because certain facts which should have been obvious before the decision was implemented suddenly come home to roost.
Well, Richard, I think that the focus has been very much on how the US stock market has been behaving with all this volatility. But I think something else more interesting has been going on this week, which is, if you recall, at the beginning of this year, there was this very popular conventional wisdom on Wall Street that Trump's policies, including tariffs, may or may not be good for America, but they'd be terrible for the rest of the world. Instead, what we have seen this week is that the dollar has suffered a very sharp decline. This is completely against what the entire Wall Street crowd was expecting. What is this revealing to me? It's revealing that the rest of the world, one, is getting its act together, as we saw in Germany with its fiscal reform. Right. And two, that I think investors are beginning to notice that there are other countries worth investing in, given all this policy volatility that's happening in the US. I think that those are the more important trends that are emerging here.
But they will take time to play out, whether it be South-South trade or trade that avoids the US. That can't happen in a moment, in a sense. I asked, though, the damage from tariffs, it's going to be deep, it's going to be broad, but will the US suffer less than others?
Well, Richard, the research that I put out here, and I wrote about this as well earlier this year, is that the rest of the world has already been moving on. That if you look at it since the beginning of Trump's first term back 8 years ago, the US share in global trade has been declining. And if you look at the fastest growing trade routes in the world, the US is not there in most of those trade routes anymore. In fact, of the 10 fastest growing trade routes in the world, the US is there at one end of those in only 2 of them. Right. So I think the world has been moving on, but yes, the world is still very dependent on the US and selling into the US. But the big shift which is happening is that the rest of the world are forming their own free trade agreements, their own alliances, and so moving on. So therefore, this volatility is here to...
Let me jump in there, because on that point, I'm going to ask you the same question that I asked Paula and Jeff Zeleny. At what point, and maybe your answer is we were already there, does the rest of the world say, you're going to do it anyway, just do it, and we'll deal with it, but we can no longer just jump to your tune?
Well, China's already showing signs of that. That if you look at China, they've barely responded to it. Even their retaliatory measures have not been very strong, but they have barely responded to any of this noise. So I think that China is playing the long waiting game. And instead, what these countries need to do is to get their own domestic act together rather than just keep relying on selling to the US. So even the message to China, which I think Xi Jinping has taken, is that they need to do much more to boost their own domestic consumption, to sort of give a reassurance to their own private sector, that we are here to back you. That's the way the rest of the world needs to play this game, which is to sort of strengthen its domestic consumer base, its domestic manufacturers, rather than just keep relying on selling to the US. And you can offset some of that. And we've seen that already in Europe, that there was so much despair about Europe. And so many Americans, thought it appropriate to lecture Europe about how weak their economies are and how poorly
right.
their economies have done, all fair. But I think that this German response, where they sort of come and say that, okay, we're going to do a massive fiscal reform here and we're going to boost our economy,
Right.
that's already having a big impact on Germany's stock markets and the whole of Europe.
I'm grateful to you, sir. I certainly will be following up with you in the weeks and months ahead on this theory of how countries are adapting